Is the stock market about to tank? You're asking at a really critical time if you understand cycles and what's about to go down in the economy. My name is Kris Krohn. I've done over $1 billion worth of real estate, and today I want to share with you how that's going to correlate to the stock market. More importantly, what's about to happen.
'Cause we're gonna be legends. What we're doing here ain't just scary. It's about to be legendary.
You know when people ask this question? When the market has been going up and up and up, maybe there was a couple days of corrections and then it bounces and it goes up and up and up. And it's weird. The more the market goes up, most people will continue gaining confidence. But some people start becoming super nervous because they know what comes up must come down. And this is that time when people are saying, all right, we are late. Like we had our last big crash now over a decade ago. And normally it's 8 years in the cycle before this happens. So like, are we building up to something really bad, or are we gonna finally break the trend after all of these centuries and the market's gonna blow through it? Well, I'm excited to have that conversation with you today. First of all, I wanna be really clear with all of you. I am not an economist, and I don't invest in the stock market. So you might want to shut off the video right now if that undermines whether you consider me an authority figure or not. What I am an authority in is cycles and real estate investment in particular. And I'm going to talk about real estate for a moment because I want you to see how it overlays with the stock market cycle. Putting it up right here on the big screen, I want you to understand that real estate over time does what? It goes up. But it doesn't do it this way. It would be really beautiful it did. Real estate, first of all, moves in a very predictable pattern. What it does is the market goes up, it peaks, and then it goes into a trough, and then it does it again. For example, if we were to look at this period of point right here, we might want to label this 2008. And the big question is, when is this going to happen? That's part of what you're asking. Now, why am I talking about real estate? Because I find that real estate is a lot more easy to understand than the stock market, but the stock market's going to follow it. Watch how these patterns play into each other right now. First of all, when the market tanked in real estate in 2008, it meant that no one was building any homes, almost virtually no one. But why does real estate have to come back? Because real estate is a function of population. So people are going to keep making babies. In America, you know, immigration is still popular. So we still have our population expanding in most places around the country. This is not necessarily true in Europe, Japan, other parts in the world, because they're facing what's called economic winter when people stop having enough babies to replace the population. But it's happening in America, which is American dream is still alive. And for the next 50 years, people are going to be investing in this country. As the market goes up because of population, here's what's going on in this part of the cycle. When it goes down, no one's building, no one's building, no one's building, no one's building, but time is passing. So guess what? Making babies, making babies, making babies, making babies. And eventually the market has to come back because there's this incredible tension. Sex is what's driving this economy. With these babies being made, basically we need homes for these families, right? And so essentially the market says, you know what? We've gone 5, 6, 7 years without making any houses, and now we're all busting at the seams and families are living in with each other and the economy's doing better and we want to actually spread our wings and live in our own home. So all of a sudden they start building again and building again, and there's a lag between the demand of construction and understanding population growth. Here's what ends up happening. There's so much pent-up demand that the market starts going up and then it shoots through and starts producing more real estate than we actually need. And when you get to a point where this line right here could best be described as the cost to build. So by the way, if it cost $200,000 to build a home, but they're now building them for $240,000, there's a $40,000 gap. And a developer, a contractor is going to say, oh my gosh, we can just build a spec house, meaning we're going to speculate that someone will want to buy this, and we'll make all the money than we do. So we're betting on the market going up. Confidence goes up. People, consumers start seeing that the market's getting better, and all of a sudden families are buying homes. And right at the peak here, the market is blowing through brand new ceilings. It's higher than it ever was historically in the past. People are excited. But guess what? Guess what has to happen? We have built more than population demands. And when you build homes that people can't live in, there's this definition of the value of a home. A home is only worth what? What someone is willing to pay. Which means if no one's willing to pay for it, then the value has to what? Has to drop until someone's willing to pay. Literally, we've built more houses and more supply than there is a demand. And that creates an inversion. It creates a problem. The market has to topple. Historically, look at what the stock market is doing. It is following this segment right here, but it is doing it in some crazy erratic ways that make it very difficult for people to be able to predict. Here's what I can tell you. The stock market generally has a correction every 8 years. During that 8-year period of time, I'm going to put that here, the first 3 years are a recapture from what was lost to get back to even. Then you've got a few years of the market dancing around and holding, and then the last 2 or 3 years, it's going to spike and it's going to jump again. And everyone gets excited, and everyone starts throwing money in, and then the market corrects again. It just does it over and over again, which is why the 30-year average, if you're going to play the stock market, if you don't know how to get in, get out, most people will say that the smartest people on the planet, like the gold winners of that Olympics, can't predict it, can't figure it out. So who are you and I to think that we can? If the smartest people on the planet can't figure it out, then the only way to win and play at the stock market is to stay long term. You want to know when the crash is because you want to pull your money out before it crashes. If that's you, then the time to pull it out is now. Reality is you're going to ride that crash and it's going to suck and then it's going to come back, it's going to do its thing. And if you're in the market for 30 years and you're earning 9% on the S&P's top 500, then guess what? You're going to average 9% a year on your money. And in 30 years, you can make something with that. But if that's not enough for retirement, then you got to pick something smarter. Ironically, the best time to get in the market is what? It's right here after it has bottomed out. And the best time to get out is after you've made some money. That's if you wanted to try to play the market, and I don't recommend it. I don't think you should. I think today's conversation is about diversification. Real estate, on the other hand, never makes these erratic movements. You have, first of all, what's called summer, fall, winter, spring, and it's a cycle that repeats itself and it never goes out of order. Real estate will never go from fall to spring to summer to winter. Like, it's always going to follow the cycle predictably. And because it's a lot more predictable than the stock market, based on timing and the fact that we are 2 years overdue from our average, my friend, right now, that should be every warning bell going off in history about what's happening to the market. While I can't predict it, and the smartest people can't predict it, that's a cycle, and you should trust cycles. I don't know if this cycle will end up being 12 years instead of 8 for what the average was. That's where people really can't guess. But I can tell you in real estate, we can guess it actually pretty easily. You see, when the market gets over that rebuild value, this is the cool thing that I'm doing. If I were to simplify my picture again, because it's getting a little bit crazy, what I would tell you in the game of real estate is that when the market's at its low, you should be what? You should be buying all the real estate you possibly can. That was Phoenix, Vegas, buying houses for 80 to 100 grand that were selling for 250 to 300. We killed it. Now where the market's headed, guess what we're doing? We're buying in markets where the market is still down here and it's still in its recovery and we have something to gain. By the time the market crashes again, we're going to be just as excited looking for the next place in the market to win. I hope that was informational for what's happening in the stock market. But guys, according to cycles, it's time to exit that if you're trying to diversify or you're pulling into another market, or you're just going to choose to be a long-term stock market knucklehead. It's not my strategy. It's not what I like to do. But listen, everyone gets to kind of pick their own financial strategy, and we'll figure out who wins when we're all 50 or 60 years old, because some of us will be working and some of us won't. Some of us will have the lifestyle that we want and we'll have the freedom, and some of us are going to be trapped like bars in a zoo doing things that we don't want to do because our money fell apart and it didn't do what we wanted it to. So if you want to learn more about real estate, not just the stock market, I wrote this book. It's free to everyone who wants to get it. I just ask that you cover the shipping on it. It's in the link below. So get your hand on this. This is the playbook for how I make the most money when the market's up, how I make the most money when the market's down, and how I make the most money when the market is undecided. At the end of the day, that's what allowed me to achieve my financial freedom in my mid-20s. And today it's about empowering other people with learning how to take financial control over their own future. If it's your time right now, get a copy of this book right here. Otherwise, make sure you subscribe every day. Ring that bell. I got a video coming out every day to help you become the financial genius that really is inside of you. I believe in you. I know you can do it. And I'll see you on tomorrow's video.